Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, overnight it was relatively quiet until early Asia time. The Australian dollar picked up at a slight pace. With the US being out in observance for Memorial Day, the market is now looking towards the RBA rate decision, which is soon to be released. It is ascertained that the statement should be looked upon very closely, just in the enlightenment of a possible hawkish statement. However, the RBA has kept to a relatively dovish stance and maintained that view for some time as they keep their historic rates as low as 0.1. Nevertheless, there has been a lot of chitter-chatter around the markets and also offshore that with the possibility due to the inflationary outlook in the US that the US Federal Reserve may eventually soon look to start talking about lifting rates, but not quite yet, but there has been some chitter-chatter. Nevertheless, the market has responded in terms of the technical aspect. After a down test on last week, the market hit the bull camp and the bulls responded. And now over the last 2 days, the market's finding a bit of an upstep. It is assessed any advancement towards that level around 78 cents to figure 15, that is, should find again a rejection. Overall, though, I feel when we look at the broader picture, is that the market is still somewhat negative. However, we're still maintaining and continuing to keep within the boundaries or the parameters of 76, 60, 80 to 78, figure 15. The euro, which is weighted at 57.6 to the US dollar, and looking at the technical pattern, has rebounded off the trend line. After taking a stab on Friday, the market is still somewhat vulnerable to break down. Until we clear the key level of 122.60, I feel the market will eventually take out the support at 121.65 and head towards 119.90. The reason behind that is the MACD is still very much weak and holding negative, even though it's showing little indication in terms of where we are presently. But keep an eye on this RSI. If it does fall back through the midway point, it does give further evidence. Although the US dollar did slip overnight, but with little, which should I say, more to the fact, thin price action due to the long weekend, that we might see a bit of a bullish response when the market returns in the US. Still keeping an eye on this pattern for dollar yen. We've got a gravestone that confirmed the break now just around this 109.45 level. I would like to see a close under there from New York and get a confirmation from the RSI to support the move back to 108.45. Sterling posted a fresh 3-year high after breaking towards that 142.45 level. We haven't closed above there, but if we do, that could see a stretch or an extended move to 143, figure 50, given that the RSI has picked up somewhat and the trend is still relatively firm from the ADX, but the MACD is still a little bit weaker, so it may be a brief up move. Nevertheless, the bulls are still present in the market. This in terms may see a little bit of liveliness when it comes to sterling yen. It may look towards that 146.5, but with a weaker technical play, unlikely to uphold. Gold is still trekking towards that 1,918 resistance. I do anticipate that because we were extremely overbought that we may see a rejection from there and see a pullback towards the bottom side of the range around 1,870. But confirmation is not there to support that the downward move. Nevertheless, above 1,918 would leave me neutral in the short term. And looking to oil, the market stepped up a little bit overnight and looking to this level 67.50.80. A close above there would see an extension up to $71 a barrel. Technically, though, it's still bullish from the ADX and the RSI and the MACD, so we could see this level eventually worn away to expose the top side. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.